This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you listen to this. I hope you're having a good one. I'm going to be going over the datasets and the SPY technical analysis for October 14th, 2025. And with that said, let's go ahead and jump straight into tomorrow's data. Now, for today's data, there really isn't a whole lot. Again, as I mentioned, the shutdown this week is causing many of the datasets to either be delayed or postponed. So tomorrow we have a few Fed members speaking. We have Fed member Bowman speaking at 8:45 a.m. I don't really expect anything out of what Bowman says, but I do have expectations out of the 12:20 speech from Jerome Powell. Obviously, he's going to move the market. He always does. So pretty much everybody's going to be listening in to what he has to say for that speech. Now, I'm not sure what he's talking about. I don't know if he's at some sort of banking event or something. I'm not sure what event he's speaking at or what all these Fed speakers are speaking at. I just know that he is speaking tomorrow. Now, for Wednesday, I do believe we still have the beige book as it is a Fed related data set, not a BLS or anything. So we should still have the beige book tomorrow. As well as some Fed speakers, but it doesn't look like there's a whole lot going on over the next, few days. So basically, tomorrow, October 14th, is Powell speaking, and then the day after that, we have a few Fed speakers and the beige book. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the SPY technical analysis, as always, let's go ahead and go over our moving averages and our Bollinger Bands. I have the levels listed at the top, so go ahead and feel free to copy those down. I'm not going to discuss each level like I do in the videos usually, as I do have the levels posted, but I am going to explain what is going on with the levels. So that's how we'll sort of do it, and let me know if you like it or dislike it, and we can always, restructure things from there. But anyway, going over the moving averages. So today we had quite a bit of buying, and we actually had the 5-MA pull up much higher than what I thought it was going to be. I thought it was going to be opening at 658, if I remember correctly, and it was all the way up to 664 something, and as of close, it pulled all the way up to 665.85, or 89, excuse me. Now, I am checking that level tomorrow as 665, just pretty much flat across the board. The reason why is the market closed at 663.04. It should pull the moving average down that whole 89 cents. So very, very likely we see the 5-MA at the 665 almost exactly. It might be a few cents below, might be a few cents above, but it will be around that level. With that said, we had the first bearish cross happen, which was the 5-MA crossing over the 10-MA. Okay, that means the 5-day moving average is now below the 10-day moving average. The next cross, if we're going to continue seeing selling downward, would be to see the 5-MA touch the 20-MA and then cross below it. Okay, now today's close was bullish, but it wasn't bullish at the same time. And the reason why is because we did not claim the 5-MA level. We did not even fully test the 5-MA level today. As far as I know, I believe the high of the day was, let's see, is that the 65? Yeah, so it looks like the high of the day was 665.13. That doesn't seem right, but that might be the overnight. Anyway, I'm doing that price wrong. It doesn't matter. I don't think we tested the 5-MA today. I could be incorrect. We might have tested it and rejected it. Um, just be aware of that. I was not here this morning to watch that occur. So, um, just looking over the 4-hour chart, to me, it does not look like that occurred. Um, let's see, because it was right towards the end of the day. It's actually after the end of the day that that happened. Um, hard to say. Hard to say. It doesn't look like it was a full 5 mod test or a full 5 mod rejection. So I am just going to say that for right now. It could have been though. Um, so just kind of keep some caution around that. Not fully sure if this was a 5 mod test or not. It does not look like it, but it could have been, and we need to be aware of that could have been, because when you test the 5 mod, you either are going to start heading up to that upper Bollinger again, or you're going to see the 5 mod start working to pull below the 20 mod. That there's really no in between on that. Either this is going to start pulling downward and bringing the 5 mod downward, challenging the 20 mod, and starting to enter a bearish position in terms of creating a selling channel and everything else like that. Now, if we did not test the 5 mod, then I do expect us to fully test that 5 mod before we head upward any further or downward any further. Yeah. Yeah, sorry, I'm just trying to think about this. Really want to see that 5 mod tested before we move anywhere. I don't think that we see some massive buying until we see that level fully tested. We need to see the upper bounds of it and the lower bounds of it tested. Obviously, we are starting to test the lower bounds of that level. Currently, the overnight price is at 664.16, so it is within the lower bounds of the 5 mod currently. Now, we have not tested the upper bounds this week. I know that the 5 mod over the last probably 2-3 months now, they've been testing the 5 mod throughout 2 days or throughout 2 trading sessions. So they'll test the upper bounds one day and then they'll test the lower bounds the other day and then they do the move. This can be like one of those situations where today we tested the lower bounds, tomorrow we test the upper bounds, and then we move from either the upper Bollinger again or back down to the 20 mod. But I really want to see that 5 mod tested. Again, generally the 5 mod is tested once every 5 sessions. That's why it's called the 5 mod. It's the 5-day moving average. So I want to see that level tested. Now, going over the 4-hour, and let's just quickly turn off the moving averages and Bollinger Bands. Just look on the hourly. So on the hourly, we have a little bit of structure forming, but nothing too major yet. And let me go ahead and bring up the drawings. This is the consolidation channel, so we're now back within the consolidation channel. And as I discussed in the video, I believe yesterday, generally when you're at the bottom of a consolidation channel, you will try to trade to the top of it. That's why I said taking calls very early was, pretty safe. Now, with that said, for bull structure here, we do have somewhat of an inverse head and shoulders. Okay, now this is going to break out extremely early in the morning. I'd be surprised if it doesn't break out before Powell even starts talking. This looks very prone to pulling right back up and forming the cup, okay? And that cup obviously is all the way back up to that 674, form a cup at the top of the consolidation channel, pull back down, create a handle of some sort, and then you break above the channel, and that is how you're back into all-time highs again. All right, so that's kind of what the bulls are looking for. They're looking for further just buying. You want to see all this selling that happened on Friday pretty much bought up. the tariff news so far hasn't been too bad. We know that there has been a lot of pressure kind of released on China so far over the weekend from President Trump. Uh, just, his rhetoric and everything talking about how they're going to deal with China. So are we going to get the 100% tariff that's going to absolutely dump the market? I don't know. I don't really expect it, but, you know, so far we are seeing bullish structure. Okay. Um, unless that tariff news comes and comes back, it's extremely likely we see some sort of structure like this, where we head back upward, we test the 5 mall, and ping back up, fill the cup. Okay. Now that's the bullish thesis. The bearish thesis is a little more tricky, as we are starting to fill this gap back up towards the top. However, we need to look for structure within this buying that could potentially take us back downward. And what I would be looking for is some sort of head and shoulders to form from here. Okay, you have a very nice left shoulder. It doesn't look very nice because I don't have the candles pulled out very much, but you have a very nice left shoulder built here. Okay, you do have this cup and handle that has formed. It has not broken out yet, so you can see this bullish breakout to form this head. So basically pull upward and then come back down, form that shoulder, and then head back down to the bottom of that channel. Okay, so that's kind of the type of price action you're looking for here if you're bearish. Now, if this does not play out, okay, if no structure plays out there, then you simply just have to wait for the top of this channel. Okay, and the reason why you wait for the top of that channel is because generally whenever we get towards the top of that channel, we pull down. And that's how these consolidation channels do work. You go to the top to the bottom, rinse, repeat. Okay, so unless structure starts forming in here to actually create that bearish move, then simply just have to be patient, allow for that move up to the upper Bollinger, up to the top of that channel, and then you short the day 2 upper Bollinger. Now, we're still below the 5 mall, so technically, all of this price action and all of this buying right here can be bearish liquidity. Okay, because remember, the 5 mall is currently at, it's not a straight line, I apologize, but the 5 mall is currently right there. So if we reject that level, then we head right back down. And what's below us right now? It's the 20 mall. And the 20 mall is really not far below us at all. So potentially we can test the 5 mall, have a rejection, test the 20 mall, and head straight back down. Okay. Now, there isn't a whole lot of data this week, so you do have to trade a lot more structurally rather than event-based. Really be looking at the hourly chart, really be looking for either bearish or bullish structures. They'll be extremely present and easy to see. Right here, it just looks like a lot of chop, but you do have some bullish structure, okay? As long as there's bullish structure there, that does imply we're very likely going to see the upside. But again, that can turn into a head and shoulders, that can turn into a rejection. We do have Powell speaking tomorrow, which absolutely he can cause massive volatility for the market. So yeah, that's the SPY. Yeah, that's the SPY. I'm going to take a look at a couple other things really quick and then we'll call this a video. Now, I just wanted to quickly pull up the VIX because you can chart the VIX daily. This is the daily chart. This is showing all the moving averages and Bollingers. Now, we did have the upper Bollinger move on Friday. We did have the day 2 upper Bollinger move as of today. So very likely we will see VIX pull downward very slightly. However, it still can continue breaking out, like I mentioned. We are seeing this very nice curve upward. And let me turn off the Bollinger Bands for a moment. But we are seeing this extremely nice curve upward. and that does suggest that we are going to start taking some of these gaps. The next major gap that we have to work on is essentially that 25.56. Another 1 or 2 days of volatility, and we will very, very likely be up there. The selling on equities pretty much is how do I explain this? A lot of equity weight has been funneled straight into tech and Nvidia, so it's very easy to extract liquidity out of the market, and they can do it very, very quickly because of that. And that's a big reason why I am watching the HYG so much, or HIG, and that is the high yield corporate debt. Now, today we had somewhat of a buying day, but the flows actually did show that we had major selling over the buying, but you know, the price is still going to reflect what's truly happening. Okay. Now, what is happening is that HIG has to move somewhat in tandem with what happens with the treasury yields. So, for example, today we saw some buying within the HIG. However, we also saw buying within TLT. It wasn't a whole lot of buying, but we did see buying within TLT. And what does that really mean? Is that TLT is based off of a guaranteed yield. Okay, that means 100%. I put my money down on a bond, I get back X% yield. That's what TLT is based around. Now, HIG is based around quote junk bonds. Okay. Now, junk bonds are the least riskiest asset out there in terms of just investing in any form of risk asset, because corporate bonds have to follow what the treasury bonds are doing. Now, if the treasury bonds are gaining weight, you will see HYG gain some weight. Now, why am I shorting this then if I'm expecting bullishness in TLT? Because this is the equity weight in the treasury market. Okay. If tech and everything in equities decides to start dumping, which, Friday we saw a very, very perfect example of that. What happened on Friday? Well, TLT ran up extremely hard while we saw HIG lose over $1 in value. So it creates a trade where there's a very safe cushion, even though the short end against HIG will have that upward pressure, just because of the nature of the yields and the spreads. The spreads between the bond instruments are going to try to remain the same no matter what the price is. If that means that HIG has to move upward in price, then that will happen. That's how they will balance the fund, because it's meant to give you a specific yield. Even though it's risk based and not treasury based, like TLT would be. So hopefully that makes sense. So even though we're seeing selling, and even though technically selling is occurring, the price on HYG can go up just because of the conditions of the treasury market. Now, again, I'm still shorting this because I do believe that a lot of the tech market has a lot of weight to lose, a lot of weight to shed, and HYG will reflect that. So when we start having a massive sell-off, we're going to see this pull down all the way to that. I'm really expecting the 78. I know a lot of people are expecting the 76, but my expectation is really that 78 area. And for me, that would be a massive, massive, massive short. That'd be a huge, huge amount of money for me. But what that would also do is create TLT running upwards. Okay. Because that's how TLT works. When equities start taking a beating, the long end treasuries start gaining weight. The reason why is because treasuries obviously are the guaranteed risk-free yield. When economic events start happening, that's what you put your money in to absorb any sort of downside. Now, another bearish thing we have going on is Bitcoin. Okay, now I'm not in the whole thesis that this was some Bitcoin dump to pay some insider 190 million or whatever. Whatever a lot of these mainstream people are saying. I think that's bunk. And knowing how trading works, we saw many signals that there was going to be a massive dump on Friday. I don't think that this was some crazy insider trade at all. Now, with that said, the price of Bitcoin pulled all the way up back to, I want to say 116,000 today. And now it is currently seeing somewhat of a double top, and this is the hourly chart. It's seeing somewhat of a double top here, and currently it's back down to 113.9. Okay. Now, the reason why I'm bringing up Bitcoin is because, excuse me, Bitcoin is entirely institutionally owned right now, pretty much. It's not an instrument that is traded by or owned by retail anymore. It's an institutionally owned currency, whatever you want to call it. But that means that it very accurately represents what the true market is wanting to do. Um, so if you see a lot of selling in Bitcoin, uh, prior to a day that potentially uh, the selling or buying could really make it or break it for a few levels, then that could be a signal that the equities are going to follow behind it. Um, Sorry if you can hear my wife and daughter. They're trying to get ready for bed. Anyway, I am looking at Bitcoin. I'm keeping a very close eye at Bitcoin. I'm keeping a very close eye on HIG. If we see HIG continue to pull down, then that will signal that the equities will want to continue to sell off. We're also looking at the VVIX, and again, this is different from the VIX. This is the VIX Volatility Index. Today it was at 116 or 110, I forgot what level. But it did pull down to 106. Now, how the VVIX works is it's an active tool, an active instrument. So it can go from $80 to $120 within a day, back to $80 within that day, depending on the buying or selling. So if VIX or if the VVIX is above 98, that means that some form of selling is happening. So even on a day like today where we saw a ton of buying, uh, even with the VVIX pulling down from 110 to 106, that still signals that people are selling equities and investing into VIX, the actual insurance side from the futures. So just keep that in mind. As long as this is above 98, that does mean that there's selling occurring. Even if the price of this is moving downward, that might indicate that there is some buying happening. But until the price is pulled below that 98, there is selling. It's as simple as that. So just be aware. It's something to keep on your watch list and to keep your eyes on because it will tell you very clearly when the market is actually selling compared to when it's not. But yeah, with that said, I think I'm going to end the video here. Thank you all for watching. As always, I've been trying to, again, focus on my health a lot, so I apologize these videos haven't been as long or anything, but really trying to focus on my health and get that back in check so that I can, trade full time again. So with that said, I hope everyone has a great trading day tomorrow. Trade safe, and I will talk to you in the next video. Thank you, and have a good one.